class. Normally, it's just
Okay.
40 minutes. So, good day, everyone. This is our sixth class. And I think today's class, I'm streaming it live on TikTok, and it's going to be one of the most important class. Like I said, from the last class to today's class alone, since we have done the basics, they are enough to make you profitable if you understand them very well. Now, his questions goes like this. If you have a daily key level, for example, if you have a daily key level like this, and then this is a weekly key level, then when the market comes and then hits a daily key level and then hits this weekly key level, are you to continue selling or anything? Now, whenever you're trading a pair, you should know which storyline is taking place. Are you on a weekly storyline or are you in a daily storyline? Which storyline is in play? If you know the one that is in play, now if a daily storyline has started, let's say this line is a 4 hour key level like this, and the market has given us a break. We know we are bullish, we're going to be looking forward for buys. Now, if this is a weekly key level, before the market gets to this weekly key level, we're on a bullish storyline. If the market hits this weekly key level, I'm not going to be scared if I'm trading like the daily, because even if we're on a weekly storyline and a daily storyline starts, the daily storyline must end before the weekly storyline continues. So I'm not going to be scared. What I mean is, now let's say we are on a weekly storyline. This is a weekly key level. This one, for example, the market came on the daily, taps and breaks. So we have a weekly storyline has started. Now let's say this is a daily key level. When the market come here, let's say now the new one I'm drawing is the 4 hour. The market comes, taps and break. This is a daily key level. Let me just write so that you guys will get it. This is a daily key level. This one right here. Then this one is a what? Weekly key level. Now, this first structure I draw, this first one, this one is a daily structure, right? You know, we are now on a weekly storyline. Then this one is a what? Is a 4 hour structure. This one is giving us a bearish daily storyline. Now, before this weekly key level, let's say the next weekly key level, this is our topic for today. Let's say the next weekly key level is above here. Before this weekly storyline continue, because we're on a weekly storyline and then a daily storyline starts, this daily storyline must end first. That's the theory they taught us, and that's what we are using. This daily storyline must come to an end. It will break, since it has broken, come to an end. Maybe we have another daily storyline around here, like this one. Then when it comes to an end, after tapping this, then the weekly storyline will now continue to the weekly key level. So when you pay attention and understand that the market moves from daily storyline to daily storyline or weekly storyline to weekly storyline, this question is not going to come up, sir, right? So I think I've given you your answer. So don't be scared. If you know the storyline that is in play, just play it. Just play it. As far as you know the storyline that is in play on that particular pair. Now, origin continuations and points of
All right.
entry.
Yeah.
Now, what are origins? What are continuations? And which point of interest are we using in the market? Now, I'll start by explaining what an origin is. Now, whenever we have a trend, listen carefully. I'll give you guys the cheats. I know some people watching my live on TikTok are screen recording, but nevertheless, let me give you guys the cheats. If you have, oh my God, my network is off. I'm back. Can you guys hear me?
Yes, we
Yes,
can.
we can hear you very well.
You guys can hear me, but it's not drawing. I'm drawing something on the screen. No, it's not drawing. I don't know why the network is crazy like this. Aha, it's back. It's back. Now, um, let's say we're in an uptrend market. When we have an uptrend, we have a downtrend market. Listen, the uptrend is like this. Then the market will keep moving up, and then we'll have a change of character or a market structure shift. Then the market will start moving down. Then we have a change of character or market structure shift. Then the market will start moving up. Then we have a change of character or market structure shift. Now, why I say today's topic is the most important is at origin continuations and POI, I'll add A plus and B plus setups. This is where I'll talk about A plus and B plus setups. Then tomorrow we quickly go into KLR. Now, when the market is moving like this place, this particular place we are seeing is the origin of this cell, right? This is the origin of this cell. This particular place is where the cell started. This particular place, and then this is the what is the origin of this buy. This is where the buy started. And then this is the origin of this cell. So any type of entry you are taking, right, this place, it's an origin entry because that's the origin of where the cell started. So there is a particular pattern or the particular structure that is going to happen at this particular point. That's why it is called an origin setup. Then anything you catch in between here in the continuation of the trend is called what? Continuation. Anything between here, it stands what? Continuation. Anything between here, even the buy is called continuation. But anywhere you catch the reversal is called what? Origin. Now, I'll talk about how the origin setup must look like and how for it to be A plus, and how a continuation setup is going to look like for it to be A plus. Now, I'll delete everything. You guys must have understood what origin and continuations are. Origin are reversals, while continuations are continuation of the trend. Now, continuations are the best thing to trade. Continuations can give you 60 to 70% rate, or let's say 50 to 65% rate, and you're going to make a lot of money trading continuations. That's what I do best. Now, let's say you have a daily key level. As always, we do only two things in the market: establish our storyline or bias, then entries and exits. That's the only thing. Any skill you have must run down to those things, right? Now, let's say we have a daily key level right here, and then we have another daily key level right here. Why am I drawing two? Because if the storyline starts here, it's likely going to end here. Immediately we have a 4-hour break, right? Now, the market came on the 4-hour, kept on running. You can see there's a short-term uptrend on the 4-hour. There's a short-term uptrend, right? It's a short-term uptrend. Now, immediately the market breaks below this low. This is the particular place we can start hunting an origin setup. Why? Because previously the market was in an uptrend, and then the market respected a key level and breaks. So the only type of setup you are likely going to treat right here is what is an origin setup. Now, I'll be blending everything with POI. I'll be blending everything with POI, how you can take the entry you need. Now, after the break, there's a daily key level. Daily key level. There's a 4-hour structure. The market gives us a break below this zone. Now we are going to be looking for sells. An origin setup is going to look like when the market pulls back and then comes down again on the 4-hour or on the 1-hour chart. It can be on the 4-hour, it can be on the 1-hour. Remember our structure. Remember our class on structure. So now we're going to be blending it with entries and POIs, like I said. This is structural liquidity, like we all know. This is structural liquidity right here. There's a break of structure. This liquidity sweep, right? Now, this liquidity, what you're going to do is to remember our 4 rules for entry. Those 4 rules are what you're going to be applying right here. A break of structure, liquidity, key level. Remember, key level closest to this liquidity, and the key level that is unmitigated. But I'll give you something extra. Always, I'll give you something extra, right? What's the extra thing? Now, the sweep, the break, the structural liquidity, and then lastly, the interesting thing is going to be the key level closest to liquidity. Now, if you want to use QM for entries, because sometimes QM can be the one closest to this liquidity, sometimes it can be the extreme that is closest to this liquidity if you are trading origin. That is only if you are trading origin, because this is an origin, because the market was previously in an uptrend and then it's trying to come to a downtrend, and you are trying to notice the downtrend, right? Now the market break sweep liquidity, break structure, give you structural liquidity. And when you apply your 4 rules, which is a break of structure, structural liquidity, key level closest to liquidity, and the key level that is unmitigated, it can be a QM, it can be extreme. If it is extreme, which is this A-shaped key level, which is a resistance, just place your limit order and go. But if this QM is closer to it, it's going to be A plus only if there is a fair value gap overlapping inside that QM close to this liquidity. Sure, you've had me. The QM, it's going to make it A plus only if there is a fair value gap overlapping inside that QM with this liquidity. Then you sell. What type of setup is this? An origin setup. Now, for an origin setup to be an A plus setup, what do I tell you? When it hit the key level, give you a break. It can be on the 1 hour. This pattern can be on the 1 hour, 45 minutes, or 30. But don't go as low as 15, okay? Please don't go as low as 15. Now, when the market comes, sweep break structural liquidity, key level closes. It can be QM, it can be extreme. If it is extreme, place it, because while I'm talking, the liquidity can come like this. So if the liquidity come like this, QM has been mitigated, so you execute from the extreme, right? But if it comes like this and you want to use the QM, you need to be overlapping inside what? A fair value gap. Now, this is what we call an origin setup. Now, let's see we continue. We have already catch the origin, and your target is this external liquidity. Remember that structural liquidity is an internal liquidity. We all did this in class, right? So now what we have next is we targeted this external liquidity. But for people like me, my final target is going to be this, right? So I'm going to sell like this. When it comes to stop loss placement, you understand how to place your stop loss using QMs, right? It's not going to go as high as this. Then let's say you're taking profit here. Now, you've started trading the origin, the downtrend has started. How do you trade the continuation? How do you trade the continuation? Now, the continuation is going to come like this. Now, continuation setups deal with fair value gap creations, and fair value gap creations deal with support break becomes resistance, and resistance break becomes support. Now, continuations are what is going to lead us to our tomorrow's topic, which is KLR. I'm not going to be streaming tomorrow's topic, I'm just streaming for today, right? Now, the markets come here, give you the entry. Market is not going to move in a straight line. No way, no fucking way. It's not your father's market. The next thing you're going to be paying attention to is there's going to be huge drop right here. The market is going to break this low. Continuation setups are going to come like this. Like this. What happened? Our rules in play again, a break of structure. First pullback. After that break of structure, key level closest to this your liquidity and the key level that is unmitigated. This time around, this is what we call continuation setup. Now, why this one is called continuation setup, bro? If you are trading a continuation trend, you are continuing a trend. Don't trade this type of setup, because this is a reversal setup, which is origin of the move. It has started. This setup is going to tell you that a trend has changed and it has started, right? But this one now is going to be continuation. If you look at between your SBPR, right, which is your POI, that's why I say I'm blending POI with this topic. This one now, what's your POI? Your POI is this QM. Your POI can be a support, it can be resistance, it can be QM, it can be RBBS, it can be SBBR, and it can be a breaker block, another block that's going to be blended with tomorrow's topic. We'll talk about breaker blocks and other blocks, right? But then now, look at it. Market break below this low. Market create this liquidity. Our rules are intact. You sell again. Remember, there must be, for it to be A plus. I'm not saying it's not going to hold. The same thing here. For it to be A plus, they need to be a fair value gap right here, even for stop loss placements. Just for it to be A plus, they need to be a fair value gap there. Now, between this low and this high, you can see this small gap between here and here. There's this tiny gap. This is what we call fair value gap creation. It's not a fair value gap like this one, but it's a gap between the low, this liquidity, and this low. That's why the market needs to come back, fill it up, and sell. That is why it is called a continuation setup. And I believe I'm more better at trading this thing, and it works more for me. There's logic behind it as always. That's how you continue the trend. This is why this one is called a continuation setup. It is called a continuation setup. This is an origin. So if you see this type of move in the middle of the chart, I'm not saying it's not going to hold you, but bon, it's not. Dr. FX did not teach you this. That's not what I do. What I basically do in the chart is I pay attention to what has been working for me for 2 years. It has been working for me fine and clean. Right? For the origin, remember, we created our bias first. Market hit a daily key level, give us a 4-hour break. Then if I can find this structure in any time frame, markets come again, give us a continuation setup. This is a continuation sell. Fair value gap creation between the low and the high, overlapping inside an imbalance, overlapping inside an imbalance. Liquidity, boom, the sell coming. Now, how you get this particular continuation entry will now depend on KLR. It will depend on KLR because you can have two, one up, one down, and you don't know which one is going to hold. But when you use KLR, automatically you know the one you're supposed to use. Right? Tomorrow is solely going to be continuations and care. That's what's going to be our topic. Now, quickly, that's for A plus when you have a storyline. Now let's talk about B plus continuations. I don't know about B plus origin because I trade origin only A plus. Sometimes I trade B plus continuations. Now, how does B plus continuation look like? The same type of setup I'll draw for buy, the same type of setup. When you come to the market and the market is moving aggressively, high, 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 low, high, 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 low, high, 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 low, like good and BTC, sometimes DBP, DPY, and you just see this straight line. And quickly on the 4 hour, on the 1 hour, you know that okay, there's an uptrending market. Clean. And then suddenly during the uptrend, you saw something like this. Suddenly during the uptrend, you saw something like this. A continuation setup. A continuation setup. Can you see this? Support break becomes resistance and then liquidity, right? Liquidity right here. Down quickly, you can take it like this. But there is no logic behind this move. That's why it's B plus. It holds. Of course, yes, it fucking holds, but it's not going to give you high probability, not like when you have this one. You have a storyline behind it and you know where the market is likely going to go. One of my pride in this industry, sorry, is basically bias. If I'm bullish, even if I can't find an entry, even if I'm going to lose that trade, 80% the market is going to go up. I've already understood bias a lot. So now when you have a clear trend, a B plus setup first criteria is a clear trend. You don't have a storyline, you don't have anything, but you have a clear trend on the 4 hour, and then you have this setup. It is very allowed for you to trade. But the entry model should not be A plus. Overlapping inside an imbalance, remember, liquidity, a pullback. Please, it should be an inducement. I don't like single candle liquidity. Then break of structure, then this, boom, you take your buy from here. Remember our stop loss placement? You know how to place your stop loss. Then where are we going to? The high, man. We're going to the high. There's a B plus, right? This is a plus. This is origin, discontinuation. POI always closest to liquidity. Closest to liquidity. Then when we talk about KLR, sometimes it's not going to be the one closest to liquidity. And I'll show you guys when we come to that one tomorrow, right? So this is about origin and continuation. So quickly we go into the chart. Quickly we go into the chart. Let's go to NZDJPY. This is where I saw a couple of setups yesterday. Oh God, my network is bad. It's not going to allow me to do what I want to do. It's not going to allow me to do what I want to do. Can you guys hear me? If you guys can hear me, please identify. I think my network is going off and on and off. Network is very bad.